Dear students, welcome you to session 60, chapter Pricing of Material Issues, Cost and Management Accounting, 3rd semester BCom, Mangalore University. Session 60 is about the preparation of stores ledger using the weighted average method. From the following details of stock receipts and issues of material X in a manufacturing unit, prepare the stores ledger using weighted average method of valuing the issues. 2017 March. First, opening stock 2000 units at rupees 5 each. Third, issued 1500 units to production. Fourth, received 4000 units at rupees 6 each. Eighth, issued 1600 units to production. Ninth, returned to stores 100 units by production department issued on March 3rd. 16th, received 2400 units at rupees 6.5 each. 19th, returned to supplier 200 units out of quantity received on March 4th. 20th, received 1000 units at rupees 7 each. 24th, issued to production 2100 units. 27th, received 1200 units at rupees 7 point each. And 29th, issued to production 2800 units. So this is a problem to prepare the stores ledger using weighted average methods, wherein adjustments relating to returns to stores as well as return to suppliers are involved. Now, the stores ledger under weighted average method, all the details like description, code number, location code, unit, maximum level, minimum level, and reorder quantity. The columns date, receipts, issues, balance. Under rates, goods received note number, quantity, rate, amount. Under issues, material requisition number, quantity, rate, amount, and the balance, quantity, rate, amount. Now, the weighted average price is calculated by dividing the value of materials in stock by the quantity of materials. So whenever there is a new purchases, the weighted average price has to be calculated. The issues have to be made as per the weighted average price. Now on March 1st, the balance 2000 units at rupees 5, so 10,000 rupees. And on March 3rd, issued 1,500 units. So there is a issue from this 2,000, 1,500 at rupees 5, 7,500 is issued. So remaining is 2000 minus 1500 units, 500 units at rupees 5. So 2500. Now on 4th, received 4500 units at rupees 6 each. So 4th, there is receipts 4500 units at rupees 6, 27,000. Now we will have to find out the weighted average price. So how do you find out the weighted average price? The quantity is equal to 500 units plus 4500, so it is 5000. So the weighted average price will be the value of materials in stock. Value of material, it was 2500 plus 27,000 divided by 500 plus 4500. So 22,500 plus 27,000 divided by 5000. It is 5.90. That is 29,500 divided by 5000. 5.90 is the weighted average price. March 8th, issued 1600 units to production. So whenever we are issuing, we have to issue as per the weighted average price. So the weighted average price 1600 at rupees 5.90. The weighted average price 5.90 is taken here, 9440. The remaining quantity is 5000 minus 1600, 3400, and the weighted average price remains the same, 5.90, 20,060 is the value. Now on March 9th, return to stores 100 units by production department issued on March 3. So first we need to look into March 3rd. So March 3rd we can see that it has materials are issued to department at 5 rupees per unit. So at the same rate, these materials are returned to the stores. So the stores receives it, and the receipts column 100 units at rupees 5, 500. Now the balance quantity will be 3400 was the earlier quantity of materials. Now 3400 plus 100, we have 3500, and weighted average price has to be calculated because there is a receipt of materials. So 20,060 plus 500 divided by the quantity of materials in stock, that is 3500. So it is 5.87. The value will be 20,560. Now on 16th received 2,400 units at rupees 6.5 each. Again there is a receipt 2,400 units at rupees 6.50. It is 15,600. Now the new quantity will be 3,500 plus 2,400, 5,900 units. The weighted average price will be the value of materials. So earlier it was 20,560 plus the recent purchases 15,600 divided by the quantity of materials 5,900, which is equal to 6.13, and the value is 36,160. That is 20,560 plus 15,600. Now on 19th, return to supplier 200 units out of quantity received on March 4. So there is a return to the supplier. So it is from the purchase which is made on March 4th. Now whenever there is a return, we cannot consider the weighted average price. Weighted average price is calculated for the purpose of issuing the materials to the department. So on March 4th, 4,500 units were purchased at rupees 6, that is 27,000. So 200 units are returned, and the issue column it will be written 200 units at rupees 6 is 1,200. So the quantity will be 5,900 minus 200 rupees, 200 units, and 5,700 it will be, and the value is 34,960, and per unit is 6.13. And on 20th received 1,000 units at rupees 7 each. So 1,000, again there is a receipt of 1,000 units. So again the weighted average price has to be calculated now. The total quantity will be 5,700 plus 1,000, 6,700, and the value will be the 34,960 plus 7,000 divided by the quantity of material in stock 6,700, which is equal to 6.14. And on 24th issued to production 2,100 units. On 24th 2,100 units are issued. So it is issued on the weighted average price of 6.14. So 2,100 at 6.14, 12,894. So the balance will be 6,700, which was the existing balance, minus 2,100, 4,600. And the weighted average price remains the same, 6.14, 29,066 is the value. And on 27th received 1,200 units at rupees 7.5 each. So there is receipts 1,200 units at rupees 7.5, it is 9,000. So the new quantity will be 4,600 plus 1,200, 5,800, and the new weighted average price will be the value of materials 29,066 plus 9,000 divided by the quantity of materials 5,800, 6.56. So value is 38,066. And on 29th there is issue to production 2,800 units. So the 2,800 units are to be issued at the weighted average price of 6.56. So 2,800, 6.56, 18,368, and the balance will be 5,800 minus 2,800, it is 3,000, and the weighted average price is 6.56, and the value will be 38,066 minus 18,368, 19,698. So it is issued at the weighted average price. So the closing stock will be 3,000 units at 19,698. So this is the preparation of a store's ledger when there is adjustment relating to returns to store and returns to the supplier. Now, another problem of store's ledger wherein we have adjustments relating to the shortage as well as the excess will be worked out now. Now, The weighted average method. The details of materials required in the production department of a manufacturing concern are given. Using the following information, prepare the store's ledger under weighted average method. The details are 2015 December 1, opening balance 850 units at rupees 8 per unit. 8th, issued 150 units. 13th, purchased 400 units at rupees 9 per unit. 15th, issued 300 units. 18th, shortage 10 units. 20th, purchased 200 units at rupees 10 per unit. 21st, excess found 20 units. 25th, issued 400 units. 28th, 5 units issued on December 15th was returned from the production department. So there are adjustments relating to shortage of materials, excess of materials and returns of materials from the production department. Now the store's ledger can be prepared this way. Store's ledger details, description, code number, location code, unit, maximum level, minimum level, reorder level and reorder quantity. The columns, date, receipts, issues and balance. Receipts, goods received note number, quantity, rate and amount. Under the issues column, we have columns for material requisition number, quantity, rate and amount. Under the balance column, there are columns for quantity, rate and amount. Now, the date December 1st, the opening balance 850 units and the rate is 8 rupees per unit, the amount 6,800. On 8th, 150 units are issued. So 150 units are issued from this 150 units and the rate is 8 rupees per unit. So 1,200 and the remaining that is the balance is 850 units minus 150, 700 units at rupees 8, 5,600. And again on 10th, 300 units are issued. There is only one lot here, that is the 700 units. From 700, 300 units are given. 300 at rupees 8, 2,400. So what is remaining is 400 units at rupees 8, 3,200. Now on 13th, there is a purchase of 400 units at rupees 9 per unit. So 400 units are purchased at 9 per unit, 3,600. Now the weighted average price has to be calculated. So the balance will be existing quantity is 400 plus new quantity 400, 800 units. And the weighted average price will be 3,200 plus 3,600 divided by the quantity 800, 400 plus 400 which is equal to 8.50 and the value is 6,800. Now 15th issued 300 units. So whenever there is an issue, it is issued as per the weighted average price of 8.50. So 300 units at 8.50, 2,550 is issued. So the balance is 800 minus 300, 500 units at rupees 8.50, 4,215. And on 18th, there is shortage of 10 units. So 10 units shortage, it is considered in issues. 10 units weighted average price is taken 8.50, 85 rupees. And the balance will be 500 minus 10 units, 490 units. Weighted average price is 8.50 and the value is 4,165. And on 20th, 200 units are purchased at rupees 10 per unit. So 20th, 200 units at rupees 10, 2,000 rupees. The balance will be 490 plus 200, 690 and the weighted average price will be 4,165 plus 2,000 divided by 690, that is the quantity of materials in stock. So the weighted average price will be 8.93. The value is 6,165. Now there is a excess of 20 units. So whenever there is an excess, it has to be treated on the current purchase price. So the latest purchase price is on 20th of December, 200 units at 10 rupees was purchased. So the same value has to be taken, that is 20 units at rupees 20 units at rupees 10, 200. So the excess, if there is an excess of material, it has to be treated at the current market price or the latest purchase price. So the total quantity of materials available now at the end of the day is 690 plus 20 710, and the weighted average price is 6,165 plus 200 divided by 710, 8.96, and the value is 6,365. And 25th 400 units are issued. So 400 units are issued at the weighted average price of 8.96. So 400 units at 8.96, it is 3,584. So the balance is 710 minus 400, 310 units. 2,781 is the value, and the weighted average price is 8.96. And on 28th, 5 units issued on December 15th was returned from the production department. So whatever is issued on December 15th, 5 units are returned from the production department. So we need to look into December 15th. So we can see here on December 15th, 300 units at rupees 8.50 were issued to one department. So when there is return, it has to be at the same price, that is 8.50. So in receipts column, return, we are writing 5 units at rupees 8.50, that is 42.5. So the closing balance will be 310 units, the existing, plus 5 units, 315, and the weighted average price is 2,781 plus 42.5 divided by the quantity 315, which is equal to 8.96. So the weighted average price is 8.96. So further, when there is issue, this price has to be used. So the value is 2,823.50. So the closing stock will be 315 units, and the value of the closing stock as per the weighted average method will be 2,823.5. So here the stores ledger is prepared, wherein there was adjustment relating to shortage, excess, and the returns from production department. Thank you.